The newspapers have recently reported that you can boost your state pension income by up to £55,000 by topping up your national insurance contributions. But is it true? Well, let's look at the background to these headlines and the facts about filling gaps in your NI record. The full rate of the new state pension is £185.15 per week, but you may get less than the full amount for various reasons, including if you don't have enough qualifying years or you were contracted out via SERPs or the state second pension before April 2016. You typically need 35 years of qualifying national insurance contributions to secure the full state pension. If you have only made 25 years of eligible contributions, for example, you would probably only receive £132.25 per week. The headline-grabbing figure of £55,000 is based upon the increase in state pension following backfilling 10 qualifying years. This would increase your state pension by £52.90 per week, and assuming you were in receipt of your state pension for 20 years, from your state pension age would mean that you receive an extra £55,000. But it's not as straightforward as it might seem. The first thing to do is to check your national insurance record to see if you have any gaps. If you already have 35 qualifying years, then you should automatically receive the full state pension. Check out my video that explains how to do that in simple steps. You also need to check your state pension forecast, and how to do that is covered in the same video. I also have a video that explains how to plug any gaps in your national insurance record if you decide that's the right option for you. If you find you have any gaps, you then need to check whether you're eligible to pay voluntary national insurance contributions. When the new state pension was introduced from April 6th of April 2016, the government also extended the normal 6-year window in which you can pay certain voluntary national insurance contributions to fill in gaps in your NI record. Until the 5th of April 2023, you can plug any gaps between April 2006 and April 2016. So you have a little over 9 months to take advantage of this extended period. You must be a man born after April the 5th, 1951, or a woman born after April the 5th, 1953 to do so. So, what does it cost to plug your NI gaps? Well, the current rates are £163.80 a year for Class 2 contributions and £824.20 a year for Class 3 contributions. You may be eligible, but topping up is not the right solution for everyone. Here are 5 factors to consider. 1. Some years can be cheaper to top up than others. For example, if you've worked part year and have paid some NICs, you may be able to complete that year more cheaply than buying a completely blank year. 2. Filling gaps for certain years, particularly those before 2016 and 17, can sometimes have no impact on your state pension. This is particularly relevant for people who have already paid in 30 years by April 2016 and who were long-term members of a contracted out pension arrangement. 3. If you expect to be on benefits in retirement, you may find that some or all of any improvement in your state pension is going to be clawed back in reduced pension credit or housing benefit. 4. If you are self-employed, you can save money by paying voluntary Class 2 contributions, which are currently £163.80 per year, rather than Class 3 contributions, which are £824.20 per year. And finally, before paying voluntary NICs, see if you can claim NIC credits for a particular year. For example, if you've been looking after grandchildren, you may be able to claim credits transferred from your grandchild's parent, and this could be a cost-free way of boosting your state pension. However, there are 2 specific groups of people for whom top-ups may be of particular benefit. Firstly, public servants or private sector individuals who retired early and have been members of a contracted out occupational pension scheme. Between 1978 and 2016, some schemes allowed you to contract out of the additional state pension. Any period you were contracted out is likely to have reduced your state pension, and your early retirement is likely to mean you have gaps in your NI record, which can be filled. The second group is the self-employed, who may have gaps in their NI record and may be able to go back to any year since 2006-07 to top it up. This group is less likely to be affected by complications around contracting hours, as this was often associated with occupational pension schemes. Lane Clark and Peacock LLP have produced an interactive tool that is intended to guide you through a series of quick questions based upon details found on your state pension forecast to help you decide whether it is beneficial for you to look at paying voluntary NICs. I put a link in the description below, but remember, it's purely guidance. It is best to seek professional financial advice. Thank you so much for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner. My aim is to help people live successful lives, and that often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to tune into that. Check out the description below so you can take a listen to that. You could also sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. I hope you've enjoyed this video. If you have, please press the like button, help more people like you find my channel, and of course subscribe so you never miss an episode. For now, I'm Justin King, helping you live your best life.